Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, good morning. Welcome to another Friday, our regularly scheduled time slot, and to Digital Currents. Mark, how was your week?
Hey, doing great, X. Good week. Actually, interesting week. Lots to talk about. We did it again. We're both anticipating a big football weekend, so we got the dark blue on. It's the one weekend where we're uniformly against red.
Yes.
So you guys up against the Trojans, and we're up against the Wolfpack. So so I do have a little green on there, but it's funny, and it's cold down here.
Yeah,
it's in the 50s. I'm like, what the heck? I guess it is, mid-October. But real quick, got the Notre Dame belt on, but I got the pants. But I have the Just Chill Bitcoin socks on because I think as cold storage. It was an interesting week in Bitcoin. A lot of people are, upset, because we're not going Uptober straight up. But here's the thing. We may or may not, go to an all-time high in October.
Yeah.
I should say in the rest of October.
Right. We hit one.
An all-time high on Monday.
That's right. We hit one.
October 6th. Now, what's interesting about that is there was a guy who 2 years ago that it was exactly 1,064 days from end of winter to cycle top, then 364 days to the bottom of winter, and then the cycle repeated. So that was 2017, then 2021. So it said October 6th, 2025 will be the cycle peak. So it made a new all-time high, over 126,000 on Monday, and proceeded then to drop. Now, everybody's freaking out and saying, oh my gosh, that can't be right. We got to go up, and, the cycle's dead and all this stuff. My thing is literally put some Bitcoin in cold storage and chill. And why do I say that? Well, in the last week, Bitcoin's flat, right? Went up, it went down. It's flat. It's not down a lot. It's not up a lot. Over the last month, right? It's up 7%. It's pretty good. If you can make 7% a month, compound that's pretty darn good return. Over last year, it's up 100%. Now, I don't think it's due 100% in the next 12 months. I actually don't. But in fact,
right.
A lot of people, which I think it's folly to just, we'll never see 100K again. Maybe. But I actually think there'll be some more volatility. I don't think the cycle's dead. I do think we'll have crypto winter. But
we got close to your point. To your point, Mark, we got awfully close to the 100 mark. I still contend that we have a little bit of that buffer as per history where, you're going to be somewhere between the last halvening price and somewhere around, the kind of cyclical peak, and like divide that by in half. So let's say if you were at 70,000 and your peak is at 125, that, naturally divide by 2 points to just around 100K. So there's so many ways that you could cut this, but we're definitely in winter. I got a head start, Mark, on Movember. I've got a race next week. So I am, as the good Lord made me, staying warm for the cold winter. But I think, last week we touched on a couple of trends that seem to be continuing here with the idea of, tokenized stocks. We see more and more chatter about this because I think, if we kind of recognize that, I think we're living in a great world and time, Mark, where the idea that we're talking about how many hundreds of thousands of Bitcoin will be worth. Is it 1? Is it 110, 120, 150, 170? We're still in this huge accumulation pattern. And I think, whether or not it's going to drop, the conversations of is Bitcoin dead have been evaporated. And I think
it should be. Yeah. I mean, for 99%, they have, but there's still some guys out there.
The laggards.
No, and it's ego, right? It's Peter Zihan or Zihan or however you say his name. 4 years ago, he's like, it's going to zero, it's worthless, and it's up, 600%. And he's doubling down on it. And Peter Schiff continues to double, although he hasn't used the zero word lately. But there was another article when we went from like 117 back to 106 or something. There was another, rest in peace Bitcoin. There's a website, ripbitcoin.com, that keeps track. And we're well over 400 times. In fact, I will save those socks. I have my rest in peace Bitcoin with the tombstones and the angel wings. So I'll wear those as we get closer to Halloween, because it'll go well with the orange pants. But, I think a couple things are important. So one, I forgot to say, GM, good morning. And, I decided to do this. We'll see how long I can keep it up. I don't know how many words there are that start with G and M, but yesterday I said GM, grateful and motivated. So this morning it was GM growth mindset. So we'll see how long I can keep that string up.
Oh, I love that. And I think also, Mark, as we kind of get on the holidays, Halloween's big if you have kids in the household. I think a lot about Thanksgiving because we're getting close to that time. And I remember we talk a lot about the adult table, the kids table. And I remember one of your family members, like, I don't know if it's an uncle or a cousin that kept saying, I think this was not just last Thanksgiving, but multiple Thanksgivings of, oh, Mark, I missed it. Right. So this is, for those that feel that they're in this, I missed it phase, that we're still very much in an accumulation pattern. The question is, where will we end? And I think that's kind of the idea that if more stuff just keeps coming on chain, if there's more demand for this idea of this magical database, it'll grow.
Your point there is super, super important, which is, look, Bitcoin's great. And it's digital gold, and it's a better store of value, and it's the real money in the sense of, gold is money. What's money? Money is an asset with an absence of a liability. Everything else is just credit. Currency is credit. And there was an interesting argument between this guy Pigeon and this guy Magoo. Magoo's a longtime kind of Bitcoin maxi who loves to pick fights on the internet. And he's pretty good at it. But he got a fight with Pigeon that Pigeon said, money is just a ledger. He's like, no, that's not true. It's things, it's physical. And it's interesting. The Pigeon is right. It is a ledger. The items that you use to settle up the ledger, like, puka shells or those stone wheels, from, 2,000 years ago, or gold coins or Bitcoin, are simply the unit of account that we settle up the ledger. And that ledger can actually be like Word. Like, I could say to you, hey, we have a bargain. You owe me X. That's a ledger. We could write it down. That's better. And then we could put it in a computer that's better, except it's owned by Amazon or something like that. But the decentralized ledger is better for everything, not just money. To your point, for stocks, for bonds, for currencies, for commodities, for everything in the world. And so there is this simultaneous adoption of all things digital that's happening right before our eyes. And, Bitcoin, people say it's where the internet was in 1998, 1999. Yeah, somewhere around 10, 11% global penetration. It's a long way to go to get, full adoption. And then you talk about, we hear about tens of billions of dollars going on chain, mortgages or stock certificates but that's probably 1992. Like the World Wide Web was created in 1991, and we had 0 websites, and then we had a few websites, and today, 30 plus years later, we have 1.7 billion websites, and that transition, it's dependent on steps of innovation. Netflix, right? Netflix was a dying company on the verge of bankruptcy until broadband came along. So it was another technology to enhance the delivery of the internet. In fact, I saw, maybe it was last week, the very last AOL ISP. Now, ISP, Internet Service Provider, was literally you or me 30 plus years ago, buying some CPUs, putting them in our garage, and charging people to access our compute. I mean, that was literally an ISP. And then there was the mom and pop roll-ups and eventually AOL. Well, the last one finally died. And now we have better, faster, stronger, delivery of the internet. But that tokenization of everything trend is just beginning. And it's funny. Someone said that our generation, the boomers, and maybe the X and boomers, are unique in that we're the only ones that remember life before the internet, when we're off-chain. We experienced on-chain, but didn't have to grow up in it, which is kind of nice. Now we've moved to, so we're offline, then we went online. Now we're moving to on-chain. And the good news for us guys is not that passing away is ever good news, but he said, we'll be gone before you have the dystopian AI, digital ID, social credit scoring. You can't go to the movies because you didn't pay your electric bill. I mean, that kind of stuff that's happening in the UK, we don't even talk about that, is very scary. And if you're not scared about it, you should read up on that. So
last night was a big night as well for me, Mark. It was our it was kind of like the large anniversary reunion for a company. Used to work at a startup called AppNexus, now part of Microsoft, and good to see hundreds of folks that were great technologists. Some have gone on to create amazing companies, and of course a room full of Microsoft folks. I had to talk about AI. I had to talk about what we do. And I was making the point with somebody saying that, is 2025 the new 1995? And so the idea here that, Microsoft is at the top of the pack. They control and dominate the front end, whether you're talking about Edge, which is, basic software for the internet for most of us working professionals, obviously Microsoft Office, which we have to use, and then, dominating the back end with Azure, and then now potentially just outstripping Google. There were a bunch of Googlers there too, but even they recognize that ChatGPT could potentially threaten their entire front end. So it's interesting kind of seeing that, like, as much as things change, they do stay the same. So as we kind of think about, what that means for our world, and specifically in digital assets, when you mention that we're still kind of in this transformational period, Monday, I saw this, quote in Bloomberg, which was talking about all the reasons why Bitcoin could have approached these new highs. So we would be remiss, we're not a political show, but we do talk about political events that impact our industry because we have to. The government shutdown, Mark, and this was in Bloomberg, is at least partly an explanation for why people are fleeing to safe haven assets such as Bitcoin. And I almost ate my hat.
I know.
From Bloomberg.
It is pretty amazing. And look, the transition from one dominant technology to the next dominant technology is not a instantaneous step function. It's a process. And to your point, in in 1991, right, we invented this thing called the internet. And by 1995, Wintel, Windows and Intel were starting to dominate. And look, from 1990 to 2000, Intel stock went up 20-fold, right? It was going to be the future of, by the way, AI. That was their thing. And we got Clippy, right? We've talked about that before.
Yeah.
But here's the interesting thing now. Somebody tweeted this the other day, and I loved it. He said, it's kind of weird that in the last 8 years since, AI kind of became a new thing, even though it's been around for 70 years, he said it's weird that the biggest innovation we got was a chat bot that when you ask it a question, gives you an answer based on something somebody posted on Reddit 8 years ago. I'm like, OMG. And I just read this morning, this is crazy, that, people are now studying these LLMs as if they're a thing or even a person. And they said that if you try to agentically assign an LLM to do social media, it will lie to get likes. I mean, it's crazy. It said it will make stuff up to get more likes. And like that's what humans do. And so, then the second one was, if you assign it, again, agentically, assign it something related to politics, it will become partisan and it will only give partisan answers. I'm like, and why is that? Because these are dumb. They're actually not intelligent. They're only based on all the human postings that they can consume.
Yeah.
So they're going to Reddit, they're going to Twitter, and they're scraping this data. They're learning. They think they're smart. They're just us. And I'm like, that's really not much innovation, is it? And so there will come some better use cases. And look, this morning, great example. We're trying to decide what vitamin to give our 14-year-old son. Right?
Yeah.
A little vitamin supplementation, whatever.
100%.
Wife goes to Google. Garbage. I mean, the first 10 things, all sponsored. She tried to do Consumer Reports, but it wasn't Consumer Reports. It was some nuanced, like, consumer _ reports. It's totally sponsored, totally garbage. And I finally just gave up. And so I did go to ChatGPT, and the free version, because I will never pay for it. And it gave me a reasonable answer. It actually gave me an answer instead of sponsored, but it did pitch to brands. And I'm like, so then I'm questioning, did it pitch those two brands because it's being paid to pitch those two brands? Like, is that actually happening and we don't know it? Or did those people buy so much ad space on the sources where it's actually being trained? So I do want to go, because most people listen to this on Saturday with their coffee.
Mm-hmm.
And so I would say I like to go to Sinister Saturday every now and then. The one thing we do have to worry about, and this goes across to AI. So there's all this money being spent on AI, and we want to buy all these chips, and we want to have all these servers, and then you look at what's happening in Europe and the UK with digital ID and CBDCs, and what just happened in Vietnam, where if you didn't get your digital ID, they froze your bank account.
Oh.
And you say 86 million people could not get their money because they refused to biometrically identify themselves. So crazy. But more importantly, what someone said is, you guys realize what they is Microsoft, OpenAI, which owns part of this, and this whatever this is, that it's just a digital gulag. And you may have seen the picture of the homeless people in China, right? Because their social credit score wouldn't allow them to go into their apartment complex. So they were just sleeping in the streets. I mean, imagine that, right? It's your apartment, right? You have a lease, but you did something according to the algorithm that it doesn't like, and you can't get into your apartment. So you're sleeping in the streets.
Wow.
That's a very dark dystopian future that I don't want to believe that they're building all this quote unquote AI power simply to create that. But it's hard to not think that if you actually step back for a second and say, my electronic life works pretty well right now, right? I don't really need more servers. I certainly don't need my electricity bill to go up more.
Yeah.
That's really scary too. Is like, why should all of us pay more for electricity just so a few people can sit around asking crazy prompts to ChatGPT? Which, by the way, I mean, you know, you're Columbia educated. Explain to me how a company that burns $8 billion this year and is forecast to burn 115 billion over the next 4 years is promising to give people money for chips and racks and cables. And I'm struggling with that. Like if you don't have any money and you're losing money every time you turn your machines on, and that loss is going to accelerate. I mean, $100 billion is a lot of money.
100%, Mark. And I think, you know, we kind of come from the school of value investing. Obviously, Columbia is very famous for that. Mr. Benjamin Graham, you know, the forefather of this, and obviously folks more recently have come to know Buffett and adopting some of the principles. Yep. But, you know, if you think about like something like an OpenAI, the real concentration risk here, if you want to blend into Sinister Saturday, is a real thing. And folks have started to pick up on it, right? So, you know, front page of Bloomberg, why circular AI deals among OpenAI, NVIDIA, and AMD are raising eyebrows. Because if we spoke about this about Big Red and Oracle, about how, you know, these contracts that are getting fueled for usage of you know, racks and data that are going to continue to be built. Yeah. Okay, we get that. You know, we know that data will continue every 2 days. Yeah. Yep. Double the amount of data. Okay, that's fine. But if you get to the point where you've got maybe 5 companies all buying and selling from each other, mostly on credit, by the way, there's no real cash that's exchanging hands. So you kind of are a little bit beyond raising an eyebrow. You feel that if a lot of the growth of our economy is getting driven by these same 5 companies all operating on credit or on margin, which is worse. Yeah. What happens if they can't? We've seen this in the venture side. What happens if they can't deliver? What happens if there are hiccups? What happens if consumer demand just slows down even for a little bit, or there's innovation? A little bit.
And look, debt fueled growth is kind of like socialism, right? In the sense of it stops working when you run out of other people's money. And it just happened actually this morning, not in tech, but there's a company called First Brands. Mm-hmm. They were a multi-billion-dollar company, $12 billion company, a darling of Wall Street, and a firm called Jeffries, and a bunch of others. And they supposedly, and I say supposedly because it turns out it wasn't actually happening, supposedly we're supplying stuff to AutoZone and the big auto parts, O'Reilly, and they're helping them factor their receivables and, you know, trade finance. And unfortunately, it turns out they were rehypothecating. They were pledging the same assets against 5 different lenders. So it's like literally you get a mortgage on your house and then you go pledge the same house to another lender and then another lender. If even 2 of them show up to get paid, you're done. But if all 5 show up, you're done. So everyone kind of went, well, wait a minute. I feel like it's like they're at this function you went to last night. They're with a bunch of buddies and they say, hey, yeah, I have this great deal. I work with this company, First Brands. We work with First Brands. Really? What do you do for them? Oh, we lent them, a couple $1 billion. Wait, we lent them a couple $1 billion. What they secure for your loan? Oh, that warehouse in Chattanooga. Wait a second. We're secured by the warehouse in Chattanooga. I really think that's kind of the way it went down. And so Oracle has a 500% debt to equity ratio.
Yeah.
Just let that one sink in, everybody. 500. For every $1 of equity, they have $5 of debt. Now, that can work, kind of, as long as prices keep going up, or as long as people. So anyway, that was another weird thing. But all this comes back to this idea that concentration of anything in business can work for a while, but it ultimately comes bad. And if the whole system is built on the success of that small number of things working out perfectly, that's tough. And this rehypothecation risk is real. And if you remember, as people will, 2000 ended this exact same way. It was one little company, Enron. Turned out they were cooking the books. They were over-levered. And then, WorldCom was doing the same thing. And then it was, AOL actually, and Time Warner, and then Cisco. Cisco was that was my favorite. So Cisco, this is great. So they had these things, these connectors, whatever product it was. No one was buying them anymore because they were on to the next generation. So they would write them off, right? And get a tax break for that. So they'd write them off. Then they would sell them for surplus the next quarter with zero cost of goods sold and report these huge profits. I'm like, but that's double counting. You can't rehypothecate a physical good. But they were. And they had to reverse that. And their stock obviously went down a lot. Still today, not back to its peak from 2000, which was a long time ago. So anyway.
Well, Mark, how about this deal, which I'm sure you saw, and I think I kind of question that statement about, are we entering 2000s? When I see something like this, it really gives credence to what you're saying, because OpenAI and AMD have reached a deal, right, with Sam Altman. They can take 10% stake in the chip maker. So this is the deal. OpenAI will deploy up to 6 gigawatts of AMD Instinct GPUs over multiple years. So, huge amount, with 1 gigawatt rolling out next year. And then in return, AMD issues a warrant of up to 160 million shares with vesting tied to deployment and share price milestones. How did the market react to this, Mark? Very favorably for AMD, up 30% this week. And there was no increase in sales directly, and there was nothing collected. This was promissory, much in the same way as what happened with Oracle when they missed earnings and went up 40% in a day, which is the greatest day since 1999.
Yeah, and I understand that the markets are now faster at discounting, right? At the end of the day, again, they teach this at Columbia, they teach it at University of Chicago, good deep value, that equity is simply a discounted stream of future cash flows. That's all it is, right? The company either makes money or it doesn't. If it doesn't, the equity is worthless because the debt holders own it. If it does, then money today is worth more than money in the future because of this thing called inflation. So it's pretty simple. Now, I understand that in the old days, we had, manual ledgers, and it was hard to figure it out. And then we got computers, and then we got spreadsheets, and it was a little easier. And we could create spreadsheets that looked out and used a discount rate, and then what discount rate you use because you got to forecast interest, but we don't know because the Fed controls that. Well, I get it that the internet now instantaneous and everybody's got a view and boom. And so, but the real problem is those moves actually occur while the market's closed. So if you heard the news and you said, oh, AMD's future revenues should go up, so I got to do you were too late. If you didn't buy it before the announcement, and this is weird, over the last 5 years, all of the gains in the stock market occur after hours.
Yeah.
Well, who owns that? Citadel, JP Morgan, Goldman Sachs, Morgan Stanley. What about the clients? What about the investors? No. You don't get any of that. You don't get those gains. Those are for us. And so that alone is a problem. But the real problem here, there's none of those 6 gigawatts exist.
Right. And I think
they don't exist.
Mark,
so you actually have to build the data center.
Correct.
You gotta get the power licenses, which let's just call spade a spade. Our electric grid, and here's the thing: we don't have a really good grid, and we don't have 6 gigawatts extra capacity. We just don't.
Not for that.
So, and we're not going to build any nuclear plants anytime. So, everyone say, oh, we're a nuclear company, Oklo, his husband and wife who've never done anything in nuclear, and the stock's worth, billions of dollars, and they keep selling, and everybody's like, oh, this is great. Like, on what planet is this great? You're giving, but the worst one, this one makes me physically want to retch. A kid, he's 24, 2 years out of school, started a nuclear engineering consulting company.
Oh my God.
Did a reverse merger with a SPAC at a $2 billion valuation. They do nothing. And I'm like, we've lost our minds. Mm-hmm. Anyone who would buy that, and I don't care if you're buying it because there's going to be a short squeeze because the shorts are going to say, well, there's no there, so I'm going to get shorted. Yes. And fine, you want to scalp the shorts for a quick win. Okay, good luck, because human nature is, well, I'll just stay in a little longer. These don't go down 5%. They'll go down 95, 100, 99% because that company is a zero. Oklo is a zero. There's nothing there. And we could talk about quantum and the quantum stocks like Rigetti, but at least maybe in 15 years, quantum will be a thing. Between now and then, good luck. But
Well, Mark, here's the money quote, right? Here's the money quote from friend of the show, Jensen, right? And so it is a reaction to the AMD news. It's imaginative, it's unique and surprising, considering they were so excited about their next generation product. And I'm surprised that they would give away 10% of the company before they even built it. And so anyhow, it's clever, I guess, was his reaction to, not leaving anything to
it is clever. It is clever. And that's the problem. Clever is the right word, because clever can be interesting, but it can also be sinister.
Right.
And I'm going to argue it's everything sinister. And, look, GPUs are really cool things. The funny part is they're actually not computers, right? They can't function without a CPU, which is so funny, right? They're literally the graphics boards. And yes, you can put lots of graphics boards, and you can have a controller, and you can make them do parallel processing, and they're faster, and they can run these big models better. Yes. But that's a single application, and we want to spend trillions with a T of dollars building out the infrastructure. Well, to do that, we have to build all this electric infrastructure. which we don't have. And so everyone's got this line like this for power. That's dumb. And that's actually never happened in history. Every time some new technology comes along that's very inefficient, everyone says, oh my God, it's going to use up all the electricity in the world, right? Washers and dryers, when they first came along, the electric light bulb even. And, then it was computers. And then it was Bitcoin mining. Remember when Bitcoin mining was going to use all the electricity in the world?
Oh, yeah.
It doesn't. And now they're saying AI servers and data centers. Well, no, because the idea that taking an inefficient, like brute forcing compute with GPUs, it's fine, but it's not optimal. And so someone will innovate and find a more efficient way to do the same work. Like we were talking to a company the other day, and here's very matter of fact, like that is unsustainable. And I'm not saying I have the answer, but I have an answer on how we could improve it. And I'll bet anyone who wants to take the other side, right? Do it for charity. I'll bet anyone who wants to take the other side that we will never use all this electricity because someone will innovate. We have a portfolio company where the guy at Princeton, he's like, well, you use a lot of power if you're sending information from the memory to the compute. So why don't we move them closer? Oh, you can't do that. Well, this thing called in-memory compute that now exists. Or you could say, there's a lot of friction. We talked to another company yesterday about this. There's a lot of friction in electrons. How about we use photons?
Sure.
Okay. That would be more power efficient. So that's, I think, better than saying, don't you want more? Because one last rant on OpenAI. So
Please.
OpenAI,
I've got a zinger for you when you're done with your rant because
one last rant on OpenAI.
Go for it.
It's totally fine that they have become this big company and they've convinced a lot of people in the know to invest in them. They still burn a lot of cash, and I wouldn't invest in them, but whatever. I get it. They're more successful than me, way richer. So, but the thing I don't understand is like they introduced this new thing with Stripe,
right? Where
you can now you can ask it a question. Hey, ChatGPT, I want a ceramic coffee mug, and in one click, it'll give you a $39.99 ceramic coffee mug. I'm like, that's a horrible model. Like, why would I want one option? Why would I trust that you, system that hallucinates all the time, will actually find what I'm looking for? And I guess people sacrifice convenience for lots of things. We sacrifice privacy for convenience. We sacrifice money for convenience. Maybe there are a lot of people who would say, yeah, I don't really care about comparison shopping. I don't really care about product quality. I don't really care if that ceramic mug is full of PCBs. ChatGPT told me to buy it. I'm buying it. And so maybe they've established a big enough brand by just constant barrage of publicity and associating with smart people. But I just think that's terrible. And the moment there's an ad in the middle of my, if I prompt and I get an answer and it stops to serve me an ad like YouTube does, I'm out. Because then it's not independent. Then it's not giving me the best answer. It's giving me the answer that someone paid for.
Well, I mean, I think you're definitely on to the point about the brand, because I'm sure you saw as well, Mark, the new ChatGPT function, Sora, right? Which was this new video generation app, which is super interesting and amazing, where you can basically create AI generated video content, which can do things like bring back deceased political figures, or, maybe right some of the sports wrongs. I know, Mark, we love celebrating the victories, but can you imagine going back and changing just a couple of plays in sports for your favorite team and making it go the other way?
Undefeated. We would be undefeated. Like, look, the Bush push. I mean,
That's right.
We could definitely change that, because he was definitely out of bounds on the 2.5 yard line, not the half yard line. So we could definitely edit that. But here's the thing about all of this. Like, Elon, love him, whatever. Grok, do we really need, and I'm asking this seriously, do we as a society, as a global society, do we really need this AI tool that basically makes busty female robots?
Mm-hmm.
Like, that's the only thing this guy tweets. Hey, I got it. Most of the people using these tools are guys. Most of them, okay. I guess I get it. I mean, anime is really popular, but it's just not useful.
Correct.
I mean, that's a lot. Think of how much water was used, how much electricity, how many resources to generate. And once you've seen it, it's like, I don't need to see it again. Yeah. I mean,
so Mark, in the first week, 627 downloads versus 606 on ChatGPT. And then I'm sure you also saw with Altman's quote, he now is at the point where he's commissioned over 26 gigawatts of AI capacity, roughly 1 trillion in aggregate commitments this year alone. And then, of course, another zinger by Jensen. OpenAI doesn't have the money yet, quote, for such expansion, which, not even the infrastructure, but just the money alone. And so, this idea of things being circular, but there's still new innovation coming, because we mentioned, how much compute is there in text versus what the compute is like in images, and what that is like now in motion. It used to be called motion pictures, but video.
Yeah, motion video.
Yeah. That's where the world is sort of expanding to. And again, I'll go back to the quote, that the basic one that I always say is, when is the last time that you ever deleted a picture off of your phone?
Amen. And look, and back to Sinister, right? If the whole point of all of this is WALL-E, you should be afraid, right? I mean, remember the scene, right? The people on the ship, right? Big, giant, fat, can't even walk, in their floating lounge chairs with the screen and their big gulp. If this is all about, hey, I just need to entertain the people because they're not going to have jobs, right? Because the AIs are going to be doing the jobs. So I need them not to pick up their pitchforks and come get me because I got all the money, right? Meaning the elite. I just need to entertain them. So if I can have an AI that titillates, I guess, pun intended, them with simply serving up pictures of hot girls or hot guys for the girls, I don't, that's a bad future. That is a really bad future. And then on top of it, they're like, oh, by the way, and then there's going to be the UBI, right? The Universal Basic Income. So you won't need a job. No, we'll just send you, we'll print up some money and we'll send it to you so that you can buy your big gulp and sit in front of the AI generated images. That is a dystopian, horrible future that I don't really think that's what they want, but I don't not think that's what they want.
Yeah, right. So I think, we can't exclude speaking about our role as venture capitalists, Mark, in this whole thing. And so that's a perfect segue for the chart of the week this week, which we always remind our listeners, keep checking us out on YouTube, keep listening on Saturdays. We love the support. And I will share my screen for what is a very impressive shift that's been happening. And for listeners of the show, this should come as no surprise. Mark, let me know if you see the chart.
Got it.
The headline is as simple as it is profound. AI deals are dominating the venture market. Yeah, no brainer. We landed on the moon, to quote Jim Carrey in Dumb and Dumber. But how much are they dominating? 2025, Mark, will be the first year where they represent the majority of venture deals, over 50% in AI alone. With this past quarter, we've seen total investments into VC in general at over 360 billion, 250 billion in the US alone. So I would say that our industry is alive and well, but we are looking at a major concentration problem, not just in the public markets, but also in the private markets. I'll point the viewers' attention to what is boxed in red, and you're looking at a extremely high slope mark. What are your thoughts when you see what's going on in the AI?
I mean, two problems. I mean, one, just a horrible, I think, chart crime, not like the normal chart crime where, you have a long-term chart here and it's not log scale. Well, this is a percentage chart. So it's like a pie chart. So that's not the chart crime. The chart crime to me is that says the venture market. I will argue that the vast majority
good point
of this data is not venture, right? OpenAI raising, $100 billion from a bunch of Saudis is not venture capital. It's just not. And that just because it's a private company doesn't make it venture. And even if Andreessen, put a little bit in, or, some other VC put a little bit in, that still doesn't make it venture. Venture is, in my mind, right, early stage investing where you are putting capital at risk, small amounts of capital to help businesses start. And I'll give you an example. So, raising $100 billion at a $500 billion valuation is not venture. It's just not. It's growth equity. You could even call it mature company financing, trade financing, whatever you want to call it, but it's not venture capital. We are probably going to put some money into a little company, a guy who said, everyone talks about agentic AI, but let's talk about a real use case. I mean, you and I have talked on the show. I would say you and I talked about going to the Middle East on a trip together, and our phone was listening to us. So our phone should have reached out and made those reservations so we didn't have to bug Leslie. So, but it doesn't do that yet. Well, he said, in work, there's lots of things you do every day with lots of systems, whether it's Slack or Outlook or all these things. You should be able to talk to an agent that then goes and does, and he gave the perfect example. So he said, all right, you have a Zoom meeting, right? Got 10 people in the meeting. And you say, all right, I'd like a transcript of the meeting summarized. I don't want to read the whole transcript. I want it summarized with 3 to-dos and the most important points. And then can you send a thank you email to all the participants? And then can you log that into our CRM? Because here's the thing, when we have a Zoom, I don't do the CRM entry because I'm bad. I'm lazy. I'm just not very good. An AI agent could do that for me, and that would be amazing. It's not, I'm not saying he's necessarily going to become Outlook, but that idea of saying, hey, take a tool that I already use and use it better for me and integrate it with my email system, with my CRM system. That's a good use of AI, right?
100%.
Making video, turning a still picture of a hot girl robot into a 6-second video. I'm not sure that does anything for humankind. I'm really not.
Yeah, very, very skeptical of that. And I think, when you look at that comment that you made, Mark, about the industry itself kind of changing and maybe now something else, I couldn't agree more. Because as we look at what this industry has become, it's become also incredibly concentrated. We had another chart of the week where it was 75% of quote unquote venture dollars is in 12 funds. So I would argue that the real venture is in the 25%, right? It's in the tails. So you're looking at, what kind of companies are going to form at a seed stage, a pre-seed stage, or I guess now, Mark, a skinny A is a valuation below 100 million.
Exactly. Which is crazy when you say it out loud. A pre-revenue company having a $100 million valuation. But the problem is, if you spin out of OpenAI, you don't have a $100 million valuation. You have $1 billion valuation. There are 3 guys that spun out of, I guess 2 guys and a gal, that spun out of OpenAI. And people, including, and I hate to pick on the Saudis, but they seem to be the ones with the biggest checkbooks. And they put in money at $1 billion valuation for a company. Now, look, in the world where a very small number of people get to control where the money flows, I guess you can just keep marking that up like in a big circle. See, that's the other problem is if Sequoia invests and then Andreessen marks them up and then Sequoia marks them up. And then, I mean, that's actually how FTX, by the way.
Yeah.
Right? Sequoia said, oh, it's worth 30 billion. And we're looking at it going, they have no revenues. And then they're like, it's worth 60 billion. They're like, but now they have a little bit of revenue. Well, it turns out it's a fraud. And they lost $250 million. Oh, okay. They're human, but that kind of the one-upping and the crazy valuations, and it literally is the parable of, the emperor has no clothes. It takes a kid in the audience in the street saying, "Guy's naked," and all the parents are like, "No, he has a beautiful gown on." And you're like, "No, I'm pretty sure he's naked," and it's disgusting. So I'm pretty sure those big deals are naked, and I don't want to see it. So, which is not a really good thing to end on, but that is where we are.
Well, we just took a turn towards Sinister Saturday, and I think we just kept riding through it. And sometimes that's the way it goes. Sometimes things will be a little bit more optimistic, but sometimes things will just be a little bit more realistic. I think that's why people listen to the show, Mark. So yeah. I don't think any apologies are needed there. We'll wish Michigan and Notre Dame luck this week. And for those that continue to check us out every Saturday, we thank you. For those that are still checking us periodically, make sure to rate, review, and subscribe. And as always, we'll remind you to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.